Well, welcome back to U.S. Farm Report this weekend, continuing our conversation about all the USDA reports and the numbers that we received on Thursday in those January reports. Dan, you have offices in South America. We like to get your take often, but when you look at USDA's numbers and their thoughts on Brazil and Argentina, do you agree?
Well, we're a little bit higher. We're right 154 right now. We do have a crop tour that's starting next week, and we'll do a better assessment of the northern half of Brazil. But as it sits today, Tyne, we think a 154 catches it. But again, remembering that every 5% move in yield in Brazil is 7.5 million tons. So, to have a 160 crop with good weather, if Rio Grande do Sul gets rain, it's still not impossible. To be under 148, 147, possible. But these are big swings. But weather over the next 3 to 4 weeks will be very, very critical and determine where we fall within that vernacular.
Dan, another big swing coming out of these U.S. winter wheat seedings numbers out of USDA, 11% increase, catching some people off guard. Give us some perspective on those numbers. Will we harvest all of those acres?
Well, it was up 3.7 million acres, one of the biggest gains we can find in years. And so, again, when you have a revenue insurance price last fall that was 880 plus, farmers went out and seeded wheat. And whether it was seeded in dust or seeded in crop, a lot of it was planted for insurance purposes. We believe that less will be harvested. And as we get to those abandoned acres sometime in the month of May, you're going to see a sharp fall from that estimate. Nonetheless, that wheat corn spread is now into 71 cents in the spot position. So it does act as kind of a cap on corn. And the same standpoint, the wheat market will find a little support because it's going to be working into feed rations.
Pete, you mentioned demand earlier, and we talked about the export demand, and you talked about renewable diesel, but what are your thoughts on ethanol? Do you think that USDA will make some more revisions now as we enter into February in that report?
I mean, when you look around the U.S. and you look at the highest premiums being paid for corn is being paid by the ethanol guys. Truthfully, I don't get it unless they knew this report was coming out ahead of time. I mean, we saw corn trading into eastern Nebraska, western Iowa at 725, 730 this week. So, I mean, I don't know. I mean, it's hard. I totally understand the way an ethanol plant works, right? They have to be running at full bore all the time in order to get the most gallons per bushel, but they're certainly paying up for it. So as far as the ethanol numbers are concerned, they're fine. They were kind of flat, really nothing to write home about there. So I don't know. It does seem though like ethanol is keeping a big bid under this market in the interior for sure.
Dan, is that what you're seeing as well?
Yeah, no, I would agree with Peter, though. We're about 50 million bushels less on our corn grind. We just say this because as we look at the premiums being paid in the Western Corn Belt and where margins are, we don't think those people are going to be quite as aggressive. And then when I look at gasoline consumption, I have a back down, if you will, in some of my ethanol usage numbers. So, again, not a big haircut, but a little lower than USDA. I would also trim corn exports a little bit more relative to world availability and what the Ukrainians are offering. But nonetheless, at the end of the day, you got to have another demand driver to take us higher once we get beyond the after effects of this report. I think that's lacking in the market, at least for now.
Okay, Peter, I mean, the thought was last weekend when we were having our discussion on here that we would see these balance sheets, these tight ending stocks actually grow a little bit, that we would see some revisions that then would loosen up those balance sheets a bit. That did not happen this week. So as we turn our attention to 2023, what do you want growers to keep in mind?
The one thing that I looked at today was the fact that these 23 corn couldn't get back over $6. So, I mean, the market is already probably pricing in above 90 million acres of corn. Now, a lot of that is going to depend on North Dakota, in my opinion, and the weather in North Dakota to see if it gets planted or not. I'm still not a firm believer that 180 million acres are out there to be planted between the two, especially with this wheat number, even though, it's hard to say. But I think that the grower needs to watch the demand side of the equation. I mean, what we're seeing right now is reaction to production changes. And if there's one thing that I've learned over the years is you sell a production rally. You honor a demand rally, but you sell a production rally.
Dan, what do you want to leave our?
Yeah, I want to leave the same thought process. That is, you stand back from the market. We are lacking demand outside of renewable diesel. Renewable diesel still has a story, or soybean oil, but the rest of it, if I'm a farmer, I'm rewarding rallies. These are supply driven, to Peter's point. And then I'm looking at new crop because I'm concerned that with El Nino coming, the U.S. could have a good growing season and we could be left with greater supply. So, if we can get these corn up to something like 610 to 630, I think that would be a really good place to start selling some new crop.
All right. Dan, Pete, thank you so much for joining us this weekend. We need to take a quick break, and then it's a one-on-one interview, exclusive interview with John Deere's Chief Technology Officer. That discussion happens next.